Question 1. Title insurance policy. Which of the following statements best explains the primary difference between an owner's title insurance policy and a lender's title insurance policy? A. An owner's policy protects the lender's investment, while a lender's policy protects the property owner from title defects. B. A lender's policy terminates when the loan is paid off, while an owner's policy remains in effect as long as the owner holds an interest in the property. C. A lender's policy covers boundary disputes, while an owner's policy covers mortgage fraud. D. An owner's policy provides coverage only for legal claims related to the property, while a lender's policy provides coverage for any title issue, including zoning violations. Answer B. Explanation. The key difference between an owner's policy and a lender's policy lies in who is being protected. The lender's policy protects the lender's interest in the property and typically expires once the loan is paid off. The owner's policy, however, remains effective as long as the owner holds an interest in the property, providing coverage against any title defects that existed prior to the policy's issuance. The owner's policy does not cover future risks, such as new zoning violations. Alaska's regulations on title insurance follow standard practices under the American Land Title Association Author Guidelines, which emphasize these distinctions between policies. Question 2. Scenario-based question. Real property law. Mr. Anderson is purchasing a piece of property that includes a small lake. During the title search, it is discovered that the neighboring property owner has been using the lake for water access for over 20 years without permission. What legal concept may apply to this situation, and what should Mr. Anderson do to protect his ownership rights? Mr. Anderson should allow the use to continue as the neighboring owner has adverse possession rights to the lake. B. Mr. Anderson should seek a quiet title action to remove any potential claims from the neighboring owner. C. Mr. Anderson should grant the neighbor a formal easement to avoid future conflicts. D. Mr. Anderson should contact the title company to confirm that the neighboring owner's use of the lake is covered under the lender's policy. Answer B. Explanation. The legal concept that might apply here is adverse possession or prescription rights, where the neighboring property owner could potentially claim a right to the lake based on continuous open and hostile use of the property for a period exceeding 10 years under Alaska law. Mr. Anderson should consider a quiet title action to clear up any uncertainty about the ownership of the lake. This action would help remove potential claims from the neighboring owner and clarify Mr. Anderson's title. In Alaska, adverse possession laws are strict, but resolving title disputes through a quiet title action is crucial to ensure full ownership rights are protected. Question 3. Title commitments. When reviewing a title commitment, what is the primary purpose of Schedule B? A. To identify the buyer and seller of the property. B. To provide the legal description of the property. C. To list exceptions and exclusions to the title insurance coverage. D. To outline the pre-closing requirements necessary to issue the title policy. Answer C. Explanation. Schedule B of a title commitment lists the exceptions and exclusions from the title insurance coverage. These exceptions outline any matters that are not covered by the title insurance policy, such as existing easements, encroachments, or restrictions that affect the property. Understanding these exceptions is critical for both the buyer and the lender as they impact the protection offered by the policy. Schedule A, by contrast, provides the legal description and parties involved, while pre-closing requirements are found elsewhere in the commitment. In Alaska, title insurance providers must clearly delineate these exceptions in accordance with both state and federal regulations, ensuring transparency in real estate transactions. Question 4. Title searches and examinations. During a title search, what is the significance of the chain of title? A. It identifies any defects in the physical property boundaries. B. It traces the history of property ownership to ensure there are no breaks or gaps. C. It lists the current tax liens placed on the property. D. It guarantees that no new easements have been placed on the property. Answer B. Explanation. The chain of title refers to the sequential record of ownership for a particular property, starting from the original owner through to the current owner. It is a key element in the title search process to confirm that there have been no breaks or gaps in ownership that could affect the property's marketability. Breaks in the chain of title can lead to disputes over rightful ownership. In Alaska, as in other states, title examiners are responsible for reviewing the chain of title to identify any discrepancies that could present risks to both the buyer and the lender. Question 5. Title insurance policies. Which of the following is typically not covered by a standard owner's title insurance policy? A. Claims made by undisclosed heirs of a previous owner. B. Forged documents in the chain of title. C. Zoning law violations after the purchase of the property. D. Unpaid property taxes from prior years. Answer C. Explanation. A standard owner's title insurance policy typically covers risks such as claims by undisclosed heirs, forgery, and unpaid taxes from before the policyholder's acquisition of the property. However, it generally does not cover violations of zoning laws that occur after the purchase of the property. Zoning issues are considered regulatory risks, and title insurance primarily protects against defects in the title, not future land use changes. Alaska adheres to all the standard coverage terms, and endorsements can be purchased for expanded coverage, but they will not include future zoning violations. Question 6. Closing and settlement procedures. Which document is used during the closing process to outline the detailed financial settlement between the buyer, seller, and lender? A. HUD-1 settlement statement. B. Promissory note. C. Title commitment schedule A. D. Quitclaim deed. Answer A. Explanation. The HUD-1 settlement statement, or in some cases, the closing disclosure, is used to itemize all charges and credits associated with the real estate transaction, including the buyer's and seller's financial obligations. This document provides a detailed breakdown of costs such as loan fees, title insurance, premiums, and escrow fees. The other documents listed serve different purposes. A promissory note is a promise to repay the loan. A title commitment scheduler provides the legal description of the property, and a quitclaim deed is used to transfer property without warranties. Alaska follows the same federal guidelines for these documents as the rest of the U.S. under the Real Estate Settlement Procedures Act (RESPA). Question 7. Real property law. Which of the following property rights refers to the right to extract minerals from beneath the surface of a property? A. Air rights. B. Water rights. C. Mineral rights. D. Easement rights. Answer C. Explanation. Mineral rights are the property rights that grant the owner the ability to extract minerals, such as oil, gas, or precious metals from beneath the surface of a property. This is separate from air rights, which refer to the space above the land, water rights, which refer to the use of water from a body of water, and easement rights, which are non-possessory interests in another's land for a specific purpose, such as utility access. In Alaska, mineral rights can be severed from the surface ownership, meaning a property owner may not automatically own the minerals beneath their land. Question 8. Scenario-based question. Title defects, MS. Ramirez recently bought a home in Anchorage. After closing, she discovered that there was a previously unrecorded mechanic's lien from a contractor who worked on the property before she bought it. What should MS Ramirez do, and what is the role of her title insurance policy in this situation? AMS. Ramirez should ignore the lien as it is not enforceable after the sale. BMS. Ramirez should file a claim with her title insurance company as the lien is a covered defect. CMS. Ramirez should pay the lien to avoid legal issues as title insurance does not cover unrecorded liens. DMS. Ramirez should take the contractor to court as title insurance only covers fraud and forgery, not liens. Answer B. Explanation. In this scenario, MS. Ramirez should file a claim with her title insurance company, as unrecorded mechanics liens are typically covered under the terms of an owner's title insurance policy. Title insurance protects against hidden title defects, including those that may not have been discovered during the title search, such as an unrecorded lien. Alaska's title insurance policies adhere to ALTA standards, which generally include protection from such defects, paying the lien out of pocket, or taking legal action without first filing. A claim would not be necessary. Question 9. Title insurance underwriting. When underwriting a title insurance policy, which of the following factors is most likely to increase the risk of a title defect? A. The property is a newly constructed home with no prior owners. B. The property was transferred multiple times within a short period. C. The property has never been the subject of a recorded lien. D. The property is in a rural area with limited access to public records. Answer B. Explanation. A property that has been transferred multiple times within a short period may present an increased risk of title defects, as frequent transfers can lead to breaks in the chain of title, unrecorded deeds, or fraudulent transactions. This situation may increase the likelihood of title defects, such as unrecorded claims or errors in documentation. In contrast, newly constructed homes typically have fewer historical claims, and properties in rural areas may pose challenges but do not inherently increase title risks if records are complete. Alaska's title insurance underwriters follow strict guidelines to assess these risks. Question 10. Claims handling in title insurance. Which of the following best describes the process for handling a title insurance claim related to an undisclosed easement? A. The title insurance company will automatically pay the policyholder for any loss due to the easement. B. The policyholder must notify the title insurance company of the claim, and the company will investigate to determine coverage. C. The policyholder is required to handle the issue themselves, as easements are always excluded from coverage. D. The policyholder must sell the property to resolve the claim, as the title insurance policy cannot resolve easement disputes. Answer B. Explanation. When a title insurance claim is made regarding an undisclosed easement, the policyholder must notify the title insurance company, which will then investigate the claim to determine whether it is covered under the terms of the policy. Title insurance companies are responsible for defending the policyholder in court, if necessary, and for resolving the claim through negotiation or compensation. Easements are not always excluded from coverage, but only certain types may be excluded based on the specific terms of the policy. Alaska follows general ALTA guidelines for claims investigation and resolution. Question 11. Title insurance regulations and compliance. Which federal regulation requires that borrowers receive a detailed disclosure of all costs and terms associated with their mortgage loan? A. Real Estate Settlement Procedures Act, RESPA. B. Fair Housing Act. C. Home Mortgage Disclosure Act, HEA. D. Truth in Lending Act, TILA. Answer A. Explanation. The Real Estate Settlement Procedures Act, RESPA, mandates that borrowers receive a detailed disclosure of all costs and terms related to their mortgage loan. This regulation ensures transparency in the settlement process, including itemized fees and settlement charges. TILA also impacts mortgage disclosures by requiring clear information about loan terms and costs, but RESPA specifically addresses the disclosure requirements related to real estate settlements and closing costs. Alaska adheres to these federal regulations to protect consumers in real estate transactions. Question 12. Title insurance as risk management. How does title insurance function as a risk management tool in real estate transactions? A. By ensuring the buyer's mortgage payments are covered in case of default. B. By protecting the lender's investment against losses from title defects that existed before the policy was issued. C. By guaranteeing the property's future value increases. D. By insuring against property damage due to natural disasters. Answer B. Explanation. Title insurance primarily functions as a risk management tool by protecting the lender's investment and sometimes the buyer's against losses arising from title defects that existed before the policy was issued. It covers issues such as claims from undisclosed heirs, fraud, or errors in public records. Title insurance does not cover future property value changes or property damage from natural disasters. This insurance provides peace of mind by addressing risks that could jeopardize ownership and financial interests in the property. Question 13. Title insurance underwriting. In title insurance underwriting, what is the primary concern when evaluating a property with a history of multiple ownership changes? A. The potential for zoning violations on the property. B. The risk of fraud or forgery in the property's chain of title. C. The condition of the property's physical structure. D. The property's compliance with local building codes. Answer B. Explanation. When underwriting a property with a history of multiple ownership changes, the primary concern is the risk of fraud or forgery in the property's chain of title. Frequent changes in ownership can increase the likelihood of errors, unrecorded deeds, or fraudulent transactions affecting the title. While physical conditions and building code compliance are important for other types of insurance or assessments, title insurance underwriting focuses on verifying the legitimacy and continuity of the ownership history. Question 14. Easements and encroachments. Which type of easement is typically considered an appurtenant easement? A. An easement granted for the purpose of installing utility lines across another property. B. An easement for access to a landlocked parcel of property. C. An easement that allows the government to access a property for maintenance. D. An easement to allow a neighbor's tree branches to extend into the property. Answer B. Explanation. An appurtenant easement is one that benefits a specific parcel of land, the dominant estate, by allowing access across another property, the servient estate. An easement for access to a landlocked parcel is a classic example of an appurtenant easement, as it provides necessary access to the dominant estate. Easements for utilities or government access might be considered easements in gross, and allowing branches to extend into another property generally falls under a different category of property rights. Question 15. Title searches and examinations. What is the purpose of an abstract of title and the title examination process? A. To summarize the title search findings and present them in a concise report. B. To provide a legal description of the property for use in the closing documents. C. To list all current property taxes and assessments. D. To record the property's deed in the public records. Answer A. Explanation. An abstract of title is a summary of the title search findings, including a condensed history of property ownership and any recorded encumbrances or defects. This document presents a concise report for the title examiner and other parties involved to review and verify. It does not serve as a legal description, list current taxes, or record deeds, but helps in assessing the property's title status. Question 16. Title insurance policies. Which statement accurately describes the coverage provided by an extended coverage title insurance policy compared to a standard coverage policy? A. Extended coverage provides protection against environmental hazards, whereas standard coverage does not. B. Extended coverage includes protection against risks such as unrecorded liens and certain off-record matters, while standard coverage does not. C. Extended coverage offers protection only for commercial properties, while standard coverage is limited to residential properties. D. Extended coverage ensures the property's future market value, whereas standard coverage focuses on past title issues. Answer B. Explanation. An extended coverage title insurance policy provides protection against additional risks that are not covered by a standard coverage policy, such as unrecorded liens, off-record easements, and certain matters that could affect the property's title but are not typically found in a standard title search. Extended coverage is more comprehensive, addressing additional risks associated with the property beyond those covered by standard policies. Question 17. Liens. Which of the following is an example of an involuntary lien? A. A mortgage lien taken out by the property owner to secure a loan. B. A mechanics lien placed by a contractor for unpaid work. C. A judgment lien resulting from a court ruling against the property owner. D. A property tax lien levied by the local government for unpaid taxes. Answer C. Explanation. An involuntary lien is placed on a property without the property owner's consent, usually due to legal proceedings or failure to meet financial obligations. Examples include judgment liens resulting from court rulings or property tax liens imposed by local governments. Mechanics liens and mortgage liens are typically voluntary, as they are agreed upon by the property owner. Question 18. Title insurance underwriting. When underwriting a commercial property, which factor is most critical in assessing title risk? A. The aesthetic appeal of the property's architecture. B. The property's compliance with zoning and land use regulations. C. The historical significance of the property. D. The number of previous owners of the property. Answer B. Explanation. For commercial properties, compliance with zoning and land use regulations is crucial in title insurance underwriting. Commercial properties often face complex zoning requirements and land use restrictions, which can significantly impact their value and usability. Ensuring that the property complies with these regulations helps to mitigate risks and avoid potential legal issues. Aesthetic appeal, historical significance, and previous ownership are less critical in this context. Question 19. Adverse possession and prescription rights. What is the typical duration required for an individual to claim adverse possession of property under Alaska law? A. 5 years, B. 7 years, C. 10 years, D. 15 years. Answer C. Explanation. Under Alaska law, an individual must typically possess the property openly, continuously, and adversely for a period of 10 years to claim adverse possession. This requirement ensures that the possession is long enough to establish a claim against the rightful owner. The period for adverse possession can vary by state, but in Alaska, the 10-year period aligns with the standard used in many jurisdictions. Question 20. Title insurance as risk management. Which situation would most likely require the issuance of a closing protection letter, CPLA? A buyer needs assurance that the property has no environmental hazards. B. A lender requires protection against potential fraud or errors in handling the settlement funds. C. A seller wants a guarantee that the buyer will not default on the mortgage. D. A title company wants to confirm that all property taxes have been paid. Answer B. Explanation. A closing protection letter (CPL) is issued to provide protection to the lender against fraud or errors in handling the settlement funds during the closing process. The CPL ensures that the title company will cover losses arising from issues related to the closing, such as improper disbursement of funds. It does not address environmental hazards, buyer default, or property tax payments, but is a crucial risk management tool for securing the closing transaction. Question 20 on title searches and examinations. What is the primary purpose of a title search in the context of a real estate transaction? A. To verify the physical condition of the property. B. To assess the market value of the property. C. To identify any encumbrances, defects, or claims against the title. D. To determine the current property tax assessment. Answer C. Explanation. The primary purpose of a title search is to identify any encumbrances, defects, or claims against the title of the property. This process involves reviewing public records to uncover any issues such as liens, judgments, or easements that could affect the property's ownership and value. It is crucial for ensuring that the title is clear and marketable before completing a real estate transaction. The physical condition, market value, and property tax assessment are evaluated through other processes. Question 22. Title insurance policies. Which of the following is typically excluded from coverage under a standard title insurance policy? A. Claims arising from errors in the public record. B. Encroachments by neighboring properties. C. Liens that are not recorded at the time of policy issuance. D. Existing mortgages on the property. Answer B. Explanation. Encroachments by neighboring properties are generally excluded from coverage under a standard title insurance policy. Standard policies typically cover issues such as errors in public records and existing liens, but they may not cover physical encroachments or disputes about property boundaries unless specifically included in an extended coverage policy. Encroachments are often addressed through additional endorsements or separate agreements. Question 23. Liens. Which type of lien would a contractor most likely file for unpaid work performed on a property? A. Tax lien. B. Judgment lien. C. Mechanics lien. D. Mortgage lien. Answer C. Explanation. A contractor would file a mechanics lien for unpaid work performed on a property. This type of lien is specifically designed to secure payment for labor or materials provided in the improvement of real estate. Tax liens are related to unpaid taxes, judgment liens result from court judgments, and mortgage liens are associated with loans secured by the property. Question 24. Closing and settlement procedures. What is the role of a closing protection layer (CPL) in a real estate transaction? A. To guarantee the accuracy of the property's legal description. B. To provide insurance coverage for the buyer against title defects. C. To protect the lender from losses due to errors or fraud during the closing process. D. To verify that all parties involved have signed the closing documents. Answer C. Explanation. A closing protection layer (CPL) is issued to protect the lender from losses due to errors or fraud during the closing process. It ensures that the title company will cover losses related to the improper handling of settlement funds or fraudulent activities. The CPL does not guarantee the accuracy of legal descriptions, cover title defects for the buyer, or ensure that all documents are signed. Question 25. Title insurance regulations and compliance. Which federal law is primarily concerned with the disclosure of settlement costs and procedures to consumers in real estate transactions? A. Real Estate Settlement Procedures Act, RISPAT. B. Home Mortgage Disclosure Act, HEA. C. Truth in Lending Act, TILA. D. Fair Housing Act. Answer A. Explanation. The Real Estate Settlement Procedures Act, RISPAT, focuses on the disclosure of settlement costs and procedures to consumers. It requires lenders and settlement agents to provide detailed information about all costs and fees associated with the closing of a real estate transaction. TILA and HMDA also relate to disclosure but are more concerned with loan terms and mortgage data reporting, respectively. The Fair Housing Act addresses discrimination in housing, not settlement procedures. Question 26. Title insurance underwriting. When underwriting a residential property, what is the most significant factor to consider in assessing title risk? A. The property's historical architecture and design. B. The condition of the neighborhood and local amenities. C. The accuracy and completeness of the title search and any potential defects. D. The current real estate market conditions and trends. Answer C. Explanation. When underwriting a residential property, the most significant factor is the accuracy and completeness of the title search and any potential defects. This involves evaluating the title for issues that could affect ownership or create legal disputes. While market conditions, neighborhood quality, and architectural details are important, they do not directly impact title risk as much as the findings of the title search. Question 27. Title insurance as risk management. What type of title insurance policy would most likely be recommended for a buyer seeking protection against risks that are not disclosed in the standard title search? A. Standard coverage policy. B. Extended coverage policy. C. Limited coverage policy. D. Basic coverage policy. Answer: B. Explanation. An extended coverage policy is recommended for a buyer seeking protection against risks not disclosed in a standard title search. This policy covers additional risks such as off-record matters, unrecorded liens, and encroachments, providing broader protection compared to a standard coverage policy. Limited or basic coverage policies would not offer the same level of protection. Question 28. Real property law and legal concepts. What is the primary difference between joint tenancy and tenancy in common in property ownership? A. Joint tenancy includes a right of survivorship, while tenancy in common does not. B. Tenancy in common includes a right of survivorship, while joint tenancy does not. C. Joint tenancy allows each owner to have different percentages of ownership, while tenancy in common does not. D. Tenancy in common includes only one owner, while joint tenancy includes multiple owners. Answer: A. Explanation. Joint tenancy includes a right of survivorship, meaning that upon the death of one joint tenant, their interest automatically passes to the surviving joint tenants. In contrast, tenancy in common does not include this right, and each tenant's share can be passed on to heirs or others as specified in their will or estate plan. Both forms of ownership allow multiple owners, and ownership percentages can vary in tenancy in common. Question 29. Title searches and examinations. Which document is not typically reviewed during a title search to verify the property's chain of title? A. Deeds. B. Mortgages. C. Property tax bills. D. Divorce decrees. Answer: C. Explanation. Property tax bills are generally not reviewed during a title search to verify the chain of title. The chain of title is primarily verified through deeds, mortgages, and other legal documents that establish ownership and encumbrances. Divorce decrees might be reviewed if they affect property ownership, but property tax bills are not directly related to verifying title history. Question 30. Adverse possession and prescription rights. Under Alaska law, which of the following must be demonstrated to establish a claim for adverse possession? A. The property must be used for commercial purposes. B. The possession must be continuous and exclusive for a period of at least 5 years. C. The possession must be open, notorious, and adverse for a period of at least 10 years. D. The property must be occupied only by the claimant's immediate family. Answer: C. Explanation. To establish a claim for adverse possession under Alaska law, the possession must be open, notorious, and adverse for a continuous period of at least 10 years. This means the claimant must use the property in a manner that is visible and obvious without permission from the original owner for the specified duration. The property does not need to be used for commercial purposes or occupied only by the claimant's family.